please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's a flat opening for the Nifty. The Nifty bank is a little bit in the red.
Fundamentally, definitely the market seems pricing in too much optimism too ahead of time.
देश के सामान्य से सामान्य मानवी की आशा अपेक्षाओं को परिपूर्ण करने वाला बजट आएगा।
जन धन योजना के तहत अब तक लगभग 31 करोड़ गरीबों के बैंक खाते खोले जा चुके हैं।
The market is holding up about 87, 88 odd points on the index. The midcap index not so much. It's down about 0.13. The NII income, which has just sort of come through, 2,967 crores.
Listen to what the market is saying. It wants to right now make a bit of a move towards large caps.
New day, new lifetime highs. The bulls continue the party on the Lal Street. Sensex gains over 200. Nifty adds over 60.
Midcap sees some profit booking as the index tumbles near 200 points. The PSU bank, pack and over-leveraged stocks lead the fall.
The economic survey expects growth to pick up pace, but only at a moderate pace. Highlights that more and more savers are putting their money into equities and therefore warns of a correction.
Maruti is the big gainer of the index today. Stock rallies nearly 4% after the company reworks its royalty agreement to Suzuki to lower the payouts.
And HDFC stock hits a 52-week high after reporting a strong third quarter set of results. Asset quality stable and individual loan book jumps by a record 18%. Tech Mahindra also rallies. It reports solid third quarter numbers. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you about hectic 8 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nayak. Hi, Prashant.
Hi, Lata. And it's going to be interesting over the next 30 minutes, what with the budget, etc., lined up. Lots of lots of buzz talk kind of sort of getting into the market, getting priced in, some more, some less. We discuss the top 5 market headlines over the next 30 minutes. Our experts will also join in to answer your stock questions. Joining us now to answer your questions are Deepan Mehta, member of BSE and NSE, technical expert Ashwini Gujral. Gentlemen, thanks very much, both of you, for being with us here on the show. Before we come to you, let's just wrap up what happened in the day today. The Nifty continues its march higher. The rest of the market kind of looks on. Lata.
Absolutely. I mean, you put it in a nutshell. Today, you may say that whereas over the weekend we thought we've got tailwinds from Wall Street, Asia and Europe were quiet today. That was perhaps a further reason why we, saw some kind of moderation to our rally. But nevertheless, you must say that there is decent amount of FII money coming in. And a point of introspection over there. Although we are getting about at the rate of 1,000 crores a day in terms of FII flows, we are among the least performing markets in Asia year to date. From January to now, of course we've done very well in terms of a 5.5 to 6% rise in the big indices, but most other indices have done a tad better than we have. That's a sobering thought. As well, of course, the point that we have been making, and in the headlines as well, mid-caps are sliding for what, the 4th or 5th day in a row, and given away the edge to large caps in a in a very emphatic manner. Probably some give back. After all, in 2017, the India small cap index was the best performing index in the world, giving something like 55% returns, and even the small caps, the mid caps, giving 40% returns. Now, quite clearly, at stratospheric levels, people seem to be swimming towards safer shores and taking profit in the mid and small caps. But stock-wise, you wanted to point out some highlights?
Autos, MNCs and IT stocks stood out in terms of pockets of strength today. And if you look at weakness, pharmaceuticals, PSU banks and FMCG, these were pockets of weakness, just to identify sectoral winners and losers. Coming on to large stocks, Maruti, Eicher, HDFC. These were really the top 3 gainers on the index. Then you had TCS, Z, something like an HUL, HDFC Bank, which all stood out with big, decent gains. You look at losers, 2 specific packs. One is Pharma, Dr. Reddy's, Lupin, Something like Midcap Pharma, Ajanta Pharma lost about 3%, but Dr. Reddy's with that 6% cut was the big one. PSU banks, the top three losers, PNB, Canada and Bank of India across the board. So there you go. Those are the losers. Broader market, Jayaprakash Associates is basically back to about what 20 odd rupees or so. Fortis was down about 6.25%, and NIIT Tech was down about 5.25%. You also had some losses in United Spirits. I mean, actually losses continuing, I should say, in something like United Spirits. Just Dial 3%, Jet Airways, which was down about 2% as well. Basically, mid-cap profit taking continuing, even as the Nifty continues its march higher. Lata.
Okay, thanks for that stock-wise summary. Let's get to Ashwini to ask him how to parse this trend that is now become the order of the day for what the past 5 days, past couple of weeks. Ashwini, the big boys continuing to set new records, but mid-caps consistently seeing profit taking. What's the advice for traders and investors?
See, whatever we may say, it's a narrowing market.
Okay.
And why is it narrowing? Because we don't have our triggers. I think CEA also said the same thing. And because we don't have triggers and because we are getting pulled along with global markets, 5 or 6 stocks are taking us higher. Now, every day if, some stocks drop off the rally, then, once these 4 or 5 stocks get exhausted, there is very little sector rotation that can happen. You have 2 or 3 large tech stocks, 2 or 3 large private banks, but the way the market reacts all day for the last many days is that it gaps up and then starts to sell off. So by holding the index up, what is basically happening is that there is profit booking behind the scenes. In the past, whenever this has happened, and this has happened each time the market is close to a top, that fewer and fewer stocks start to lead the rally, and finally once those stocks are over, then possibly the market gets into an intermediate correction. So if I had to advise somebody in terms of what to do, I think each time you get a gap up, it's useful to take money off and sit on 50% cash and deploy when that correction happens, because I would think it is say within weeks it is likely. Now what trigger that would have, why would that happen? Chances are it will be a global move, and once it's a global move, we will participate with it on the downside.
Okay, so prudent advice. I mean, if you are sitting on lots of profits, prudent to take some profits off when you essentially have the opportunity.
You have the gap up.
And now you have the opportunity. Okay, the second headline of the day, the weakness on mid-cap index continues. The index slipped close to 200 points, and the weak links were the PSU banks and over-leveraged stocks. Bank of India, Canada Bank, Jayaprakash, Reliance Communications were some of the top losers, and these stocks basically lost over 3% each in trade, 3% and more actually. We got a couple of questions from that pack, Lata.
Oh, absolutely. So let's invite, the first question is coming from Rajan, who has tweeted to us that he has 600 shares of IDBI Bank at 70 rupees a share, wants a short-term target on this stock. Okay, short-term, then it'll have to once again come to you, Ashwini.
See, anything this IDBI, IDFC, etc., I don't think are going anywhere. If you have to buy an outperformer. The problem with buying an underperformer is that often it does poorly when the market rallies, but it falls a lot more when the market declines. If I were him and I want to do a bank, I would go with a private sector bank, Yes Bank, IndusInd Bank, which even if they do correct, chances are will come back and give you higher levels. I don't think IDBI is going anywhere in a hurry.
Okay. Well, I think the next question is something which Deepan would like to handle. Deepan, there is a KDP Reddy who has written to us with a question on Siemens. He says he has 2,500 shares of the company, which he bought at 1333, around 1,300 rupees. Has been holding the share for a year now. Wants to know if he should continue holding or if he should book out. Deepan?
See, I think that Siemens has been doing well recently, but it has been a huge laggard as compared to some of the other capital goods manufacturing companies. And I think, maybe it's a better idea to try and liquidate the position gradually over a period of time. Going forward as well, I don't see much of growth coming through in Siemens. I think it's a cyclical business, and there are some cyclical, tailwinds benefiting the company at this point of time. But the earnings are quite volatile and very difficult to get a handle on exactly where the company will be, what revenues and profits will be going forward, say, a couple of years from now. So I would say that in a situation like this, it's better to move to some of the stronger players like, say, Larsen & Toubro, or some of the other, infra companies which are engaged in road construction, where there is at least a visibility of earnings because of the large order book position that they are sitting on. So I would say that it's better to exit out of the position, but do it gradually because it seems to be a large position.
All right, Deepan, thanks for that. Let's move on to the third headline today. The economic survey pegs GDP growth for this financial year at 6.75% and expects the economy to accelerate to between 7 to 7.5% next year, that is FY19. The survey also shows that more and more savers are putting their money into equities and warns of a short-term correction in the markets. Let's listen in to what the Chief Economic Advisor, Arvind Subramanian, actually said.
The Indian stock market, this boom is very different, and make no mistake about it. It's very different because it reflects, एक तो हमारे interest rates बहुत high हैं. Second, it reflects a massive portfolio reallocation by investors, households, away from gold, financial saving, and real estate into stocks. That's not happened to the same extent, and part of the reason it's happened in India is because of the policy actions. So this makes the Indian stock market very interesting, but also something that we have to monitor very carefully because it's very different from elsewhere. And that's why heightened vigilance is called for.
Okay, I think what he is not saying is that you haven't yet seen the evidence of earnings. Money has come in for reasons other than earnings, and therefore bears monitoring. I think that's well said. We have to take a break. On that note, we are coming back. Our experts will be with us, and we are going to tackle two other important headlines that came from the market from Maruti and HDFC. Back in a jiffy.
Welcome back. You're with us here on Markets Today Talk Back. A new record high for the Nifty. Midcaps continue to suffer. And we're, of course, taking all your questions which are coming in. Ashwini Gujral and Deepan are with us to help us answer the questions which are coming in. To the fourth headline of the day then, Maruti surged in trade after reporting a stable quarter. The stock got an extra boost after royalty rates to Suzuki are set to be revised downwards on all models since the model Ignis. We've actually got a caller now on the stock. Nagraj Kulkarni is calling us from Karnataka with a question on Maruti. Nagraj, hi. Thanks for calling in. What's your question?
Yes, sir. I have purchased Maruti. Sir.
Go on, sir.
I have purchased Maruti since 3 months back. Hello?
Yes, yes.
Go ahead.
3 months back, sir. Can I hold or any news about bonus, sir?
Your cost is 6,000 rupees a share, is it? And you have 30 shares. And
Yes,
and you're in no immediate need of cash? Or you need to sell?
No need, sir. No need, sir.
Okay, so let's take this to Ashwini. Ashwini, what would you tell him, Maruti?
Well, update your stop to 9,000. In case 9,000 gets broken ever, then you should be out. And if there is upside and it goes beyond 10,000, maybe you can get more upside. But, this is a phase one stock of a bull market, consumption. Can we go on buying, same number of cars all the time? I doubt it, although in India, cars is a consumption item all over the world. It's a cyclical issue. But I don't think it can quite do what it has done over the last 3 years. So the pace is going to slow down. At the moment, he can just keep us a 9,000 stop and, kind of ride on.
Well, Mr. Nagaraj, you could, I guess the answer is very clear. Keep a stop at 9,000. If it goes below 9,000, then sell and take your profit home. But otherwise, perhaps you can still ride, but don't expect it to rise the way it has risen in the past year. About bonuses, we are not best placed. We'll have to ask the company as and when they announce. Okay, with that, let's go to the final headline of the day. Big earnings. HDFC and Tech Mahindra announced their numbers. Let's take a look at HDFC first. It hit a fresh 52-week high as the mortgage lender reported strong quarterly numbers. It saw a 11.2% jump in net interest income, driven by strong growth in the individual loan segment. Gross NPA stayed below 1.2%. Abhishek is here to tell us what we should watch out for. Abhishek, your key takeaways?
HDFC Limited reported a very strong set of numbers today. Now, their individual portfolio saw the highest growth rate in the last 4 to 5 quarters, and that has not come off of a small base. Remember that in Q3 FY17, that individual portfolio grew by 14.7%. Even the non-individual portfolio, which grew close to 21%, had a larger base effect of last year, wherein it grew at 18.5%. Both these put together, you know, the loan growth or the AUM growth was 18% plus, and that drove both the NII and net profit ahead of our polls. Net interest margin remained largely stable at 3.86%, while asset quality also remained under control, with gross NPA at 1.15% versus 1.14% on a sequential basis. Let's listen into what the management has to say about the growth.
We had a very strong growth this quarter in terms of loan approvals and disbursements, particularly in the individual category. So loan approvals to individuals increased by as much as 30%, and loan disbursements to individuals increased by as much as 27%. Now, in a base as large as ours, that is a significantly substantial kind of a growth that we saw.
Okay, those are words coming in from Keki Mistry. Dayanand Krishnan essentially has got a question on HDFC. He has 400 shares of HDFC and he's paid 1768 rupees, 1,768 rupees each for the shares. He's been holding for the last 6 months. He's a long-term investor and wants to know if he should continue holding or sell. 400 shares at 1,768. Deepan, what are your thoughts on this, HDFC?
No, I think a categorical answer. He has to continue to remain invested in HDFC. And what we have seen is that even at such a high base, the company is able to grow its book the way it has. And last 2-3 quarters have been pretty impressive. And mind you, HDFC really focuses on individual loans. Some of the other housing finance companies, they are more into loan against properties and developer loans as well. But that proportion is very less as far as HDFC is concerned. And with increased focus on affordable housing, maybe something positive would come from the budget as well. We're very optimistic on the entire housing finance industry, and HDFC being the market leader could be a great beneficiary if there are some tax proposals, or as and when we see increased affordable housing projects, reaching delivery stage. So I would say remain invested in HDFC. It's a nice long-term secular growth story, and even from these levels, it should deliver decent returns going forward.
Okay, so that's the take on HDFC. It's delivered some, what, 60%, 70% year on year.
Oh yeah, both HDFC and HDFC Bank. I mean,
yeah, and in spite of it, stick on is what Deepan is saying. Let's get to the other big earnings today. Tech Mahindra reported a good set of numbers for the third quarter. Net profit came in at over 920 crore rupees. That beats street estimates. Company exceeded expectations on margins as well. Naveen is here to give us the key takeaways from the Tech Mahindra numbers. Naveen?
Well, Tech M posted strong set of numbers for Q3. Revenue growth was more or less in line with what the street was expecting, but the margin, that is where the beat had come in. Now, talking about the numbers, the dollar revenue, that grew by close to 2.5% on a quarter-on-quarter basis, majorly led by the new IP partnerships that the company had got into. Also, the margins, clear beat, 12.8% versus a 10.6% quarter-on-quarter. Remember, our expectation on the margins, EBIT margins, were around 11.9%. The reason why the margins have improved has been the operational efficiencies that the company has been able to bring into because of the higher revenues. On the PAT front, also a clear beat. PAT has grown by 12% at around 950 crores. Remember, the expectation on the PAT was around the 775 crore mark. Remember, this comes in spite of the forex gain coming at around 100 crores versus 227 crores. So operationally, strong set of numbers by Tech Mahindra. The things that we need to know from the management is like the turnaround strategy for LCC, which seems to be improving. On the other hand, pricing outlook for the top clients as well as the outlook on the margins. But in terms of the numbers, expect the stock to be in green in tomorrow's trade. Back to you.
And react it will tomorrow because I mean I think the numbers came in as the markets were closing right after that. Twitter user Ramendu Bose has 75 shares of Tech Mahindra bought at an average price of 535 rupees. Stock is 600 plus now. He wants a 12 to 18 months view on Tech Mahindra. Ashwini, I mean, your mantra last couple of days has been rotate into techs. I mean, this rally has just started. So bullish on this one. What's your view?
See, what you need to compare is that how well is the stock doing. I think TCS is doing much better than Tech Mahindra. In case Tech Mahindra would have crossed 750, maybe Tech Mahindra was the outperformer. But in this case, I think TCS, NIT Tech, stocks which are already at new highs, because the index is also at new highs. So any stock which is still kind of languishing lower is an underperformer. So if I were him, I would probably move into a TCS, because that looks like doing the next 25% more easily than a Tech Mahindra. In terms of smaller companies, maybe on reaction he can get into Sonata or NIT Tech, etc. But Tech Mahindra, I would club it with large cap companies. I think all the companies, Infosys, HCL, TCS, Tech Mahindra is not really outperforming these companies, so maybe moving to a TCS is better.
Okay. Well, we will have to leave it at that. Can't go to Deepan on that issue. We have run out of time. Thank you very much, Ashwini and Deepan, for joining us and taking questions of our guests. And with that, we wrap up this edition of Markets Today. Talk back. Thanks for watching.